Hey everyone, it's Finny6, and today we're diving into a topic that sounds too good to be true, turning your TFSA into a multi-million-dollar account. We're not talking about a measly million, we're talking tens of millions. Now I know what you're thinking, that's impossible. But hold on, because we're actually looking at two real-life Canadians who did just that. They managed to amass over $40 million combined within their TFSAs, with one account alone hitting a staggering $44 million. We're going to break down how they did it, the strategies they potentially used, and the crucial factors that led to their extraordinary success. Now, before we get into the nitty-gritty, it's important to remember that these are exceptional cases. We're talking about hitting the lottery in the stock market, which comes with significant risks. But hey, it's still fascinating to analyze, right? One potential strategy involves options trading. Imagine this. You start with $10,000 in your TFSA back in 2011. You decide to go all in on Tesla call options, betting that the electric car revolution is about to take off. Fast forward a few years and boom, Tesla's stock explodes, your options become wildly profitable, and that initial $10,000 balloons into a life-changing sum. You reinvest those gains into other high-growth companies like Nvidia, Shopify, and even take a gamble on the infamous GameStop short squeeze. If you manage to time these trades perfectly, taking advantage of the incredible bull market we've seen over the past decade, you could theoretically turn that initial $10,000 into tens of millions. But here's the catch. The CRA, they're watching. They're looking for any signs of what they consider business-like trading activity within TFSAs. Excessive trading, leveraging strategies, and consistently profiting from short-term market movements can raise red flags. It's crucial to understand that TFSAs are designed for long-term savings, not day trading. Let's shift gears to a slightly less adrenaline-pumping, but equally mind-blowing strategy, long-term investing. Imagine this, it's 2009, the markets are still reeling from the financial crisis, and a little-known company called Nvidia, specializing in graphics processing units, is trading for around $10 a share. You decide to max out your TFSA contribution that year, investing every penny into Nvidia. Now you're probably thinking, that's a lot of faith to put in one company. You're absolutely right. This strategy requires exceptional foresight and a strong belief in the company's long-term potential. But here's where the magic of compounding comes in. Nvidia's stock price has skyrocketed over the past decade, with returns exceeding 10,000%. If you had held on to those shares, reinvesting any dividends along the way, your TFSA would be worth an astonishing amount today. Of course, riding out those market fluctuations wouldn't have been easy. There would have been doubts, moments of uncertainty, and perhaps even the temptation to sell when the stock dipped. But the key is to stay the course, weather the storms, and let the power of compounding work its magic over the long haul. Now, let's explore a strategy that's a bit more niche but still holds incredible potential, leveraging employee stock options within your TFSA. Imagine this. You're an early employee at a promising tech startup. They offer you stock options as part of your compensation package, giving you the right to buy company shares at a discounted price in the future. You believe in the company's vision, you see its potential, and you decide to exercise those options and hold on to the shares within your TFSA. This is where things get a little tricky. The CRA has strict regulations regarding what qualifies as an investment within a TFSA. Private company shares, like those from startups, are generally not considered qualified investments unless they meet specific requirements. One crucial factor is the arm's-length relationship. Essentially, you cannot be directly involved in the day-to-day operations of the company. Now, let's say your startup goes on to become the next big thing. It goes public, its valuation explodes, and those shares you're holding skyrocket in value. Congratulations, you're now sitting on a gold mine, all within the tax-sheltered confines of your TFSA. But navigating this strategy requires careful planning, a deep understanding of CRA regulations, and potentially seeking advice from qualified financial professionals. So, there you have it, folks. We've explored some potential paths to building a multi-million-dollar TFSA, from the high-stakes world of options trading to the long-term compounding power of index funds and the exciting yet complex realm of employee stock options. But here's the reality check. These are exceptional cases, not the norm. Attempting to replicate these strategies without a thorough understanding of the markets, Risk management and CRA regulations is like playing Russian roulette with your financial future. Instead of chasing these extraordinary cases, focus on building a TFSA strategy that aligns with your risk tolerance, time horizon, and financial goals. Start by checking out our free guide on the 5 steps to a $1 million TFSA, where we break down proven strategies for maximizing your tax-free growth potential. And remember, if you're dealing with private company shares or exploring more complex investment strategies, it's always a good idea to consult with a qualified accountant or financial advisor. They can help you navigate the intricacies of TFSA rules and ensure you're on the right track. And before you go, be sure to check out our videos on CRA red flags and banned TFSA investments to avoid any costly mistakes.